When you think of businesses that can weather any economic storm, what comes to mind? Probably things like grocery stores, right? Or healthcare. But what about the company that hauls away your trash every week? We're going to dive into this because one of the biggest names in the game is telling a really fascinating story about our economy right now. So meet Republic Services. I bet you've seen their trucks around. They are an absolute giant in environmental services, serving something like 13 million customers. I mean, they handle it all, from your recycling bin at home to highly specialized industrial waste. They're a quiet but totally essential part of our daily lives.
And this is where it gets interesting. We keep hearing about economic headwinds, right? Slowdowns in manufacturing, construction, feeling the pressure. But then, Republic Services comes out with their latest quarterly report for Q3 2025, and they just posted record-breaking numbers. That doesn't quite add up, does it?
I mean, how is a company that's so tied to the ups and downs of the economy, more construction means more debris, more manufacturing means more waste. How are they not just getting by, but actually thriving? Well, that's the big question we're going to unpack in this explainer.
Okay, first things first, let's get a real sense of just how well they're actually doing. The headline numbers from their third quarter are, frankly, pretty incredible. The big one everyone's looking at is this: adjusted earnings per share of $1.90. Now, this totally smashed expectations, and it's just a crystal clear signal that the company is making a ton of profit. But believe it or not, that's just the start of the story.
When you dig a little deeper, you see a business that's just firing on all cylinders. Their revenue is growing steadily, and their core profitability, basically how much cash they're squeezing out of their main business, their EBITDA margin, that's getting even better. Plus, they're keeping their customers happy. I mean, a 94% retention rate, that's fantastic. And on top of all that, they're on a shopping spree, buying up smaller companies and investing over $1 billion just this year. So the key takeaway here is this isn't just one good number. It's a picture of a really healthy, growing company.
Okay, so how are they doing it? Well, the single biggest piece of the puzzle is something called pricing power, and let me tell you, they are absolute masters at it. In this industry, there's a term you gotta know: core price. It's actually a really simple but powerful idea. It just measures how much they're raising prices for their services, but it ignores all the crazy ups and downs of fuel costs. It's the purest way to see how much they can charge and get away with it.
And boom, here it is in action. It's so clear. In what they call the open market, so think competitive commercial contracts, they jacked up prices by a whopping 8.6%. Even in restricted markets, like city contracts that have more rules, they still managed to push through a 4.8% increase. The bottom line is they are charging more, pretty much across the board, and people are paying it. And hey, you don't have to take my word for it. The CEO, John Vanderark, said it loud and clear. Their secret sauce is the ability to raise prices faster than their own costs go up. That right there is the engine that's driving their bigger and bigger profits. It's the absolute core of their success right now.
All right, but it can't be all sunshine and roses. A company this big isn't totally immune to what's happening in the broader economy. And if you look really closely at the types of trash they're collecting, you can actually see the slowdown happening in real time.
Now this is fascinating. You've got this complete contradiction. On one side, the big containers, the kind you see at factories or major construction sites, collections for those are down almost 4%. That's a direct sign that things are slowing down in those sectors. But at the very same time, the amount of construction and demolition waste that's actually hitting their landfills is up by over 45%. What? How is that even possible? Well, hold that thought. And you can see that weakness pretty clearly in their more specialized environmental solutions division, too. This is the part of the business that handles things like big industrial cleanups. Revenue there dropped by $32 million from last year, and it's for the same reasons, that manufacturing slowdown and just fewer big emergency jobs.
So back to that mystery. What on earth explains that massive, totally contradictory spike in landfill volume? Well, it turns out the answer wasn't about the economy at all. It was about the weather.
So far this year, Republic has brought in an extra $100 million in revenue just from cleaning up after major events. And the biggest driver of that? Hurricane recovery efforts down in the Carolinas. All of that debris, all of that wreckage, it had to go somewhere, and it went straight into their landfills.
And here is the real kicker. That $100 million in cleanup money, it came in at an incredible 80% incremental profit margin.
That is some of the most profitable work they could possibly do. So this unexpected and, yeah, tragic event gave them a massive high-profit boost that perfectly papered over the slowdowns they were seeing in other parts of the business. But look, you can't build a long-term strategy on one-time events, and Republic Services knows that. So they're using all this financial strength they have right now to invest, and invest heavily in the future of waste. And they're making some really big, really smart moves in sustainability that also happen to be great for business. They're opening what they call polymer centers to turn old recycled plastics into valuable new materials. They're capturing the gas from their landfills and turning it into renewable energy, with 6 new projects just this year. And they're going electric with their trucks, with 137 already on the road. This is a huge bet on a future that's more about reusing and less about carbon.
So let's put it all together. You've got powerful pricing, a kind of mixed economic picture, this temporary boost from the hurricane, and these huge investments in the future. What does that all mean for next year?
Well, the company sees a pretty balanced picture. Their core strategy, growing by raising prices and buying smaller companies, that's still very much in play. But, and this is a big but, they're being super clear that the $100 million they made from hurricane cleanup was a one-time deal. That's not happening again in 2026. And of course, the same big question marks about the economy that are hanging over everyone are still out there for them too.
Which kind of brings us full circle, back to where we started. The story of Republic Services really shows that even the most essential businesses feel the economy's push and pull. But it also shows that with smart pricing, real discipline, and yeah, maybe a little bit of unexpected luck, you can build something that's incredibly resilient. It really makes you wonder, maybe in a shaky economy, the most durable companies are the ones providing a service so fundamental we just can't imagine living without it.